Welcome back, investors. Ticker Time News. I'm Adam, and Salesforce, ticker symbol CRM, is trading roughly flat today following the company's Q4 earnings, even though Salesforce achieved its seventh EPS beat in a row. Salesforce experienced strong demand across all products, all region, and all customer sizes. The pandemic has spurred many companies to rethink their digital capabilities in terms of Salesforce automation, customer service, marketing automation, and analytics. And Salesforce's Q4 results reflect that initiative. EPS was once again well ahead of expectations, but to nitpick just a little, the size of the beat was smaller than its most recent earnings, and it wasn't in the double-digit range for the first time in several quarters. Okay, before we dive into this earnings report any deeper, could you smash that like button, share this video, and click that join button to get our top 10 stocks list? And if it's your first time watching, click subscribe. Thank you, my friends, for doing that. Now, revenue rose 25.9% year over year to $7.33 billion, nicely above prior guidance. Salesforce's core business continues to perform really well. Sales Cloud and Service Cloud are now both $6 billion businesses annually. And in the fourth quarter, Sales Cloud grew by 17% and Service Cloud by 18% year over year. Salesforce posted great performance across every region, up 23% in the Americas, up 38% in EMEA, and up 20% in APAC. Current RPO rose 22% year over year to $22 billion, down roughly from the $23 billion growth in Q3. Now, the report's main problem was the company's guidance. Salesforce guided Q1 EPS well below estimates, while its revenue guidance was better than expected. Now, I have come to expect downside EPS guidance from Salesforce, as the company tends to lean conservatively on that metric. That also helps to explain why Salesforce tends to report a big EPS upside for those who didn't know. This period featured the second full quarter with recently acquired Slack in the fold. Revenue from Slack came in at $312 million, up a solid 11% quarterly. And I must admit, I did have my doubts that Slack was the right fit for Salesforce, but so far, it's contributing pretty well. Other highlights include the company's metrics on large deals. The number of seven-figure deals that signed in Q4 grew 34% year over year, and its number of eight-figure deals more than doubled. The bottom line here, demand clearly remains robust due to high interest in digital transformation. It seems that even as the pandemic winds down, companies are not slowing their transitions to digital, and they shouldn't. The stock is taking a modest hit today, mostly on the lackluster guidance and the more modest EPS beat. But I'm a little surprised by the stock's reaction. Granted, this was not Salesforce's greatest report, but it was still quite good. And the stock's price has already dropped by a third since mid-November. Overall, the move that the stock has recorded in recent months strikes me as perhaps overdone. If we go back and look at the stock's chart from December 2nd, 2020, all the way through May the 28th, 2021, Salesforce was range bound. It had a bottom somewhere around $210 and a top right around $235. If we look at where the stock is trading at today, it's just starting to get into the bottom area of that range, meaning we have a good chunk of space left to move up before we hit any resistance, maybe around $235 a share. Well, that's what I think about Salesforce's earnings report right now. But what do you think about their soft guidance, and do you think their stock is fairly valued? Let me know in the comments below, as your comments make these videos so much better. Smash that like button, share this video, and click the join button to get our top 10 stocks list. And if it's your first time watching, click subscribe. Thank you so very much for watching, and I'll see you in the next video.